How to use key levels in trading. Let's go. What key level actually is some type of a zone, some type of a price, which price reacted from and rejected or break and retested and went to the opposite direction. Okay, it can be marked out as a support, as a resistance, supply, demand. Anyone is doing it a little bit differently. I'm using support and resistance and structure highs, structure lows as my key levels. Okay, I'm gonna explain it. So if I'm drawing my key levels, what I'm looking for is reaction and then market structure. Market structure. So okay, reaction. What does that mean? The stronger the reaction I get from that specific level, the bigger value is it for me, the bigger value that level has for me. Okay, which means let's go on a silver chart and let's see. Let's say I'm gonna draw, this is range, so let's say I'm gonna draw a support level like this. Okay, if you can see this zone, when price, every time when price tap the zone, it give us a little bit, not a little bit, really strong reaction. Okay, every time when price respect the zone, it gives out a little bit reaction, even though when price broke that zone, it broke back up, retested, rejected, go higher, which means that is a strong key level for me. Okay, for example, if I'm gonna draw, I don't know, let's say some support and resistance, let's say like this. Okay, you see price reacted as resistance, reacted as support, resistance. That's good, but the type of reaction is not what I want to see. Okay, because for example, I will draw this example 1, this example 2. If price is doing something like this, when the reactions are not that clear, not that strong, okay, I'm not even gonna draw that level. I'm gonna notice it, it's there, but I'm not gonna pay that much attention to that level because it's not that significant for me. Okay, what I want to see is something like this. Okay, when price is doing something like this off of that level, that means every time when price gets to this level, I'm gonna be paying attention. Okay, and I'm gonna be telling to myself, okay, let's say I'm bullish and price get to this level, there is a really high probability that price will shift from this bearish pullback and go bullish again. Okay, same thing with bearish market. If I'm bearish, price breaks that level, retests that level, and price is currently here, I will be thinking, okay, there is a real high probability that we are gonna reject this level like we did in the past, let's say, and like we did in the past here, and we are gonna continue to the downside. Okay, that's the type of levels that I want to see and that I'm gonna draw. Okay, so if I go on a chart and I remove drawings, so the good key level for me is, let's say, this. Okay, and another thing, guys, the key levels, it's not just a specific price. Okay, it's a zone. Key level is a zone all the time. You can mark it out as a price to be the accurate as possible. How to do it? It's by taking the average of every time price tapped this level and draw a line here to be the most accurate you can possibly be. So you can see this was a fake out, price tapped it here, and also broke it, retested, and tapped it here. So this is a average of this price, so you can be more precise like this, but this is a zone. It doesn't mean when price gets to this level it's gonna be retesting this average. Okay, it can retest only this peak or like this and go up from here. So that's why I want to draw it as a zone, not as a price. Okay, so that's the first thing, which means the reaction. Okay, another zone I can draw like this. Okay, because if you see, even though we were in the range market, the price reacted here. Let me draw it like this. Price reacted here, price reacted here, broke under, retested, reacted, broke above, retested, broke under, failed to continue, broke above, retested. Right here acts as a level of support as well. So that's a good level for me as well. And the third one will be right here, okay? And in this price action, I don't see any more clean key levels. Maybe you can find, if you scale down on the lower time frames, you will find for sure. But yeah, for you guys just to understand, it needs to have big reaction like this, big reaction like this, huge reaction like this, same thing, okay? Based on the reaction, you can identify if that key level is strong or if that key level is weak. Simple as that, okay? So that's the first thing. And the second thing, as I said, is a market structure. Highs and lows, okay? What I mean by this. Let me draw some example right here. So in this case, what I'm using as my key levels, because I trade heavily based on market structure, key levels for me are previous levels of structure, previous highs, like this, and previous lows in a downtrend. Previous highs in uptrend, previous higher highs in an uptrend, previous higher high in an uptrend, and previous lower low in the downtrend. Okay, this is a low, lower low. Okay, what I'm gonna be looking at, price retesting this previous lower low and go down from that point. And this works really, really well. If you know how to combine market structure with these key levels, you are pretty much set to go. Because let me show you some example. Okay, let's go on a, let's say, H1 chart. It's whatever. And let's go on silver right here. Okay, so if I'm gonna draw market structure on silver right here, so I'll be drawing it like this. Okay, cool. So if I take this picture out now, let me check. If I take it out, what you can see is, right, let me take it out a little bit more. What you can see is price. What price did is it was trending down, then market broke market structure, and what it tested previous lower high point. Okay, right here. Right now we are in bullish market because we are getting series of higher highs and higher lows. Then market broke structure right here, and what market tested? Previous higher high point right here. Okay, previous higher high point is this, and now went up again. And where it was, if you can see it, look. So I will mark it as a zone, and price retested it to the fucking T, and you can be buying from this key level. Okay, this is the previous high. Okay, so I'm gonna be drawing it right here, and look at it again, guys. Price retested this to the T again. Okay, that's beautiful. This cannot get any cleaner than this, and I just found it on a random example on a chart. Okay, this was a structure high which was broken right here, retested, broke structure, continued to the upside. Okay, right now this is new low, this is new high, this is previous higher high. Price retested it and go higher and broke structure to the upside again. So guys, as you can see, like these two levels, these two methods of key levels, you can combine and you can use to your advantage. And if you combine it with the market structure, as I said, you are pretty much good to go. Because the thing is, market moves either like this or like this, which is uptrend, downtrend, or range, okay? Now, if you can spot the key levels, that's usually when the market turns. If it's previous structure high, and it doesn't have to be all the time, okay? Let's say this is previous market structure high, but market can go, let's say here, and there could be some daily key level or some H4 key level, and we get retest it, reject it, and go up from here. It doesn't have to be always this, but I'm just saying, market tends to retest that previous structure high and previous structure low, reject it, and go up. Or if that is not the case, it will go to some other key level, which you find out and mark out based on the reaction, and it will reject from here.